The JSE reported an increase in interim earnings driven by the impact of market volatility, interest rates and a push into new services such as market intelligence and shareholder management. Nastassia Arendse spoke to the CEO of the JSE, Leila Fourie.
The past 6 months has really demonstrated very strong performance across all lines of our business. Our revenue was up 10% and every single one of our business lines were in positive territory. Our costs were very well contained at up 3%, which is far below inflation. And this translated into our profit being up by 29%. And these results really demonstrate that we've created a platform for growth. Our pivot to growth is starting to demonstrate results, and we are particularly pleased that we were able to grow our shareholder services as well as our information services that you mentioned. There are challenging global and macroeconomic headwinds, but the platform that we've built withstands those headwinds, and importantly, throughout the period, we've demonstrated resilience in systems being able to power and enable the exchange trading.
Depending on which, media house or financial media, news site that you look at, everyone talks about the delistings that's happening on the Johannesburg Stock Exchange, on the JSE, as it were. What would you like, I suppose, the viewers to understand about what's going on in that space, and also what the push into alternative forms of raising capital looks like in South Africa?
Nastassia, we are seeing a change in how companies raise capital. In years gone by, most companies came to the exchange and they listed their company in order to raise funds. Nowadays, we're seeing a lot more private market capital, which is private investors investing in those companies. During a downturn, typically we see the smaller and the mid-cap companies contracting, and we've seen this over the cycles over the last 20 years. This is a global phenomenon, and what the JSE has done is we've introduced a new infrastructure which enables private and small companies, particularly in the small and medium enterprise space and also in the infrastructure space, to raise capital, and that capital is raised in what we call a private platform. So they don't have to comply with all the big listings requirements that the larger companies have to comply with. We've seen tremendous response. 11 companies in the last few months have already indicated their desire to raise capital through what we call an issuance. And those companies range from hospitals to schools to solar panel companies and other renewable companies. So these are the growth nodes of the country. They're very important for growing our ecosystem. And it's really a sign of our responsiveness and our innovation in what the market is demanding.
From a capital expenditure point of view, where are you making capital commitments going forward, say, for the next 6 months or so?
We've signaled to the market that we are investing in our information services. So all the data that you would see from our trading market on trading screens comes from the JSE. We repackage that data. We provide it on new technology, which makes it more accessible. We are also investing in purchasing new companies through acquisitions, and that will continue to diversify our revenue. And then, of course, we always continue to invest in our technology systems. The JSE provides a world-class trading platform. Our uptime is well ahead of international precedent, and the resilience that we've shown both through the pandemic, where we saw enormous volatility as a result of what was going on in the market through the pandemic, as well as over the last 6 months during the Russia crisis. And so that resilience is an important place for investment.
Well, that's a wrap from the On Point team.